All right, today we're digging into the latest annual report from a Japanese manufacturer called Hagiwara Industries. Now, on the surface, they seem pretty straightforward, but their latest financial results, they've got this fascinating puzzle hidden inside, and we are going to solve it together. So, when you first glance at the main numbers for Hagiwara's 2025 fiscal year, something just feels off. The report gives you these two numbers that seem to completely contradict each other, and it makes you stop and wonder, wait, what's going on here? Okay, here's piece number one of the puzzle. The company's operating profit. And this is a really key number that tells you how well their main day-to-day business is doing. It fell by a whopping 30%. I mean, that is a huge drop, and it usually means they had a really tough year. But then you look at the final bottom line number, the net profit, and this is where it gets super weird. Even with that 30% crash in operating profit, the company's net profit actually went up by more than 18%. So how on earth is that possible? How can the performance of your core business tank, but the money you actually take home at the end of the day goes up? This is the central mystery we're diving into. It's a perfect example of why you've always got to look past the headlines. To start to unravel this, you first need to understand that Hagiwara Industries isn't just one single business. It's really a tale of two very different divisions, and they each have their own products, their own customers, and, as it turns out, their own problems. And this really breaks it down. First up, let's look at their synthetic resin products. Sales were only down a tiny bit, and that's because a record-hot summer created this huge demand for their heat-shielding sheets. That was a big win. But on the flip side, they got hit hard by tough price competition from overseas. Now, over in the machinery division, sales fell much more, down 11.5%. They had a hit product with a new metal foil slitter, which is great, but it just wasn't enough to make up for a big drop in their other machine sales. So here's the crucial takeaway from all that. Digging into their main businesses, it doesn't solve our puzzle. Actually, it makes the mystery even deeper. Both of Hagiwara's main divisions had a tough time, and their profits went down. So the answer for that rising net profit has to be hiding somewhere else completely. So if the answer isn't in their normal, everyday sales of sheets and machines, where is it? Well, the key is actually hidden in plain sight, on a single line in their financial report, a one-time event that has nothing to do with their regular business. This is the number that changes absolutely everything. 800 million yen. That's about 5.4 million US dollars. This one number is the entire key to understanding Hagiwara's bizarre profit picture for the year. You see, that 800 million yen was booked as a special profit. And just like it says here, that's basically a one-off gain that's outside of the company's normal operations. In Hagiwara's case, it was a government subsidy they got to help build a new factory. This single injection of cash is the only reason their net profit went up. It's a perfect example of how one little line item can totally flip the story a financial report is telling. Okay, mystery solved. But, a one-time cash infusion like that can sometimes cover up some deeper problems. So now that we know what happened with the profit, let's take a quick look at the company's overall financial health and see how strong they really are. This chart here shows their self-capital ratio. Think of it as how much of the company is paid for with its own money versus how much is debt. A higher number is better, it means less risk. And look at Hagiwara's. It jumped from an already pretty strong 68.1% to a very, very solid 72.3%. This tells us that even though they had a tough year operationally, this company is on really firm financial ground. The cash flow statement tells an even clearer story. Let's just think of it in 3 simple steps. First, their main business, even in a tough year, brought in a healthy 4.48 billion yen in cash. Okay, step 2, they took a big chunk of that, 2.77 billion, and put it right back into the company's future, buying new equipment. And then third, with the cash that was left, they paid down debt and paid dividends to their shareholders. That right there, that's the playbook for a really mature, well-run company. So what we have here is a company that had a tricky year on the operations side, but is financially an absolute rock. So the big question is, what happens next? Well, let's take a look at what the company itself is forecasting for the year ahead. And here's their game plan. They are predicting a really strong recovery. They expect sales to jump almost 10% and that core operating profit to bounce back by an incredible 43%. But notice the net profit. They expect it to fall by over 16%. So why is that?
Well, it's simple. They're not expecting another 800 million yen government subsidy to fall out of the sky. This forecast shows things getting back to normal.
So how are they going to get that massive 43% rebound in operating profit? Their strategy is pretty clear. They're going to push their high-tech products, like those heat-shielding sheets we talked about. They're going to expand into new markets, boost sales of that new slitter that's doing so well, and go after growing industries like batteries and recycling. In short, they're doubling down on what they know already works. And really, this all comes back to the company's official slogan, which I think gives you a great feel for their whole philosophy. It's not just about making money, it's about creating good products that actually help their customers and solve real problems. Which brings us to our final question. We've seen how a one-time payment can completely change the look of a company's year. Now, with Hagiwara being financially stable but facing a lot of pressure to get their core business humming again, will this focus on just making good products be enough to deliver the major turnaround they're promising? I guess only time will tell.